Hello, everybody. My name is Bryce Deeney. I'm co-founder and CEO of Equipify, and we appreciate you coming to our webinar today to learn more about consumers and how they interact with buy now, pay later, and what the current state is, how it impacts credit unions and banks. All of you have seen in the news recently some major announcements coming out from very large companies. For example, Apple announced their Apple Pay Later product within the next iOS major release. Now, when Apple gets into a market, the world talks about it in a big way. There's a few snippets from articles here, but there's been recent articles from the likes of Forbes, American Banker, TechCrunch, Motley Fool, all talking about Apple's position within this market and why they're getting into the buy now, pay later market. There was also a very recent announcement about PayPal's expansion. PayPal has been inside of the buy now, pay later market for actually over a year now, but they're expanding their product to offer more longer term installments to consumers based on consumer needs. Now, these are just two examples, but there's been a very large monumental shift into buy now, pay later from major tech players, major fintech players. Now, the major reason why major fintech companies and tech companies are getting into buy now, pay later is because it's becoming a predominant use case and preferred method for paying for millions of consumers within the US. Recently, there's been several studies conducted. One of them talks about that 60% of US adult consumers have used buy now, pay later so far at least once. And a recent study said that the buy now, pay later volume is going to increase from $22.9 billion to over $90 billion within the next few years. Now, when you look at the purchase to payment journey, there's a lot of ways that consumers can make a payment for whatever it is that they're buying. If you think back traditionally, you basically pulled out the card that was in your wallet, you paid with a check, or you paid with cash. Now that technology is becoming more and more sophisticated, there's lots of different points at which a consumer can decide to use a third-party company over their financial institution's card product that they've used predominantly for every other purchase. Now, fintechs are coming in and making these offers online. They're making these offers in store. They're sending out mass emails, mass texts. They have QR codes at the mall. So they are trying to convince a consumer, instead of using their card from their financial institution, to start using their product. And I'm not going to walk through each point here, but just know that there is a lot of competing moments within a consumer's shopping journey that fintechs are trying to attract and switch that consumer from using your card product to their product. Now, as consumers make those choices, there is a race not only for that one purchase, but for whose product or payment method will I as a consumer want to start using for every single purchase moving forward. And what's really in a top of wallet product? It's something that offers flexibility for the consumer on how they want to pay. It's something that offers visibility into the financial management and health as a consumer. It's something that offers a loan portal, meaning I can actually manage all of my payments and make sure I have enough money at the end of the month or during my payment cycles. So it's something that offers a holistic, seamless experience that is simple for a consumer to use. Now, we believe that the winning solution is the one that best understands and serves consumer preferences. So it's not just building a product and trying to convince a consumer to use it. It's looking at consumer behavior, what they want, and building products around that to better serve their needs and wants. Today, the payment ecosystem is very fragmented. There are a lot of different options for a consumer to choose throughout the payment to purchase journey on which payment method do they want to use, which third-party fintech do they want to use, or which third-party payment vehicle company that they want to use. The problem is none of those systems actually integrate inside of where they actually manage their money, which is the mobile banking app of their primary financial institution. And because of this, there's a disjointed consumer experience when it comes to paying off that buy now, pay later plan. Now, as a consumer, I may have plans with third-party companies like Apple, Affirm, Afterpay, and I have to set up my bank account or my card from my primary financial institution to pay off those plans. Now, those third-party companies don't have visibility inside of my checking account real time. So it's up to me as the consumer to make sure I have enough money when those payments are scheduled to come out, or else it's going to lead to either me over borrowing, or it's going to lead to me, unfortunately, overdrafting or NSFing my account. So I think that there is a better way that this can be solved for consumers. Buy now, pay later companies are becoming even more sophisticated in their offerings and their customer acquisition tools to acquire new consumers to use their products over their existing financial institutions' card products. Now, because of that, there's been a lot of focus and attention on the regulatory impacts, specifically around consumer health. And are these payment products and features that are being offered to consumers in the consumer's best interest when it comes to their money management and their financial goals? For products like Klarna is getting into launching Visa cards. Affirm actually is launching their Debit Plus program. All of you, I'm sure, have seen that Apple is launching their Apple Pay Later product. So there's a lot of different new products and feature sets coming out that is trying to enhance that consumer experience to convince the consumer to use their products over the existing products that the consumer was already using. So if you've been paying attention, there's been a common theme throughout the last few minutes, and that's consumers like to use their primary financial institution's card products, and they've been using those products for years. There's third-party fintechs that are trying to steal that market share from their trusted financial institution. But there's a better way. Financial institutions are actually the ideal leaders for a consumer-centered buy now, pay later solution. This year, Affirm saw year-over-year growth that honestly blew my mind. They had 54% year-over-year growth on the revenue side as a fairly large company already, just after a few years of starting their company. But even more importantly, they found that millennials and Gen Z are nearly 2 times more likely to use buy now, pay later, especially when prices on the goods that they need to buy are rising. And I think everybody can agree that prices are rising and consumers are looking for ways to make those payments. Now, financial institutions are losing engagement, market share, and revenue to buy now, pay later fintechs. Now, we're not just talking about things like interchange and interest income, which those are very relevant. But really, if you look at buy now, pay later, this is a customer acquisition tool being used by third-party fintech. So it's not just that one purchase the consumer is making a choice on who do they want to use for this particular purchase. This is allowing that third-party fintech to introduce themselves as a wallet and as a shopping and payment experience to really take over that relationship. Now let's bring this back to financial institutions and your relationship and engagement with your cardholders. Now, there's really 2 main sets we're going to talk about today. The first is the fact that you know your cardholders' financial health and goals. So if you're the primary financial institution for a consumer, you already know how much money do they have within their checking account and savings accounts. What's the history on that? Is it going up? Is it going down? Do they have direct deposit on file? Have they overextended themselves and NSF'd or overdrafted their account? And how often, how frequent, how recent? There's a lot of data points there that you as a financial institution can utilize to determine eligibility for things like buy now, pay later, and making sure that consumers only receive offers and only can accept offers that fits within their financial journey and lifestyle. The second piece is, as the financial institution, you also have the cardholder data on their consumer spending habits. So things like, where do they shop? How frequent do they shop? And what dollar amounts are they making purchases for? Now, all of this data can turn into actionable insights and offers sent out that are personalized for a consumer. That way they feel like their financial institution knows them and has relevant offers for their preferred types of purchases. Financial institutions can unify the entire buy now, pay later experience for their cardholders by bringing it into the mobile banking app the consumer already uses today. Not only are financial institutions finding ways to become the center of the buy now, pay later shopping experience, consumers also want this too. Recently, there was a survey conducted, and 70% of active BNPL users would prefer this type of solution to be offered from their financial institutions and not from third-party fintech. Now, it's important to talk through the consumer shopping experience and payment experience over the last several decades. Now, when credit cards first came out, they were predominantly only offered by major companies. Now we're talking, Capital One, Chase, Bank of America, Discover from Sears. So there was only a few players. Now, as those products became normalized and democratized throughout the US, now you could go to any financial institution within your community and receive those types of offers and set up those payment preferences. When buy now, pay later came onto the scene in the US, there was only a handful of options. There was Klarna, Affirm, Afterpay, and a few others. Now, as consumers started changing their behavior and actually adopting those and preferring those over the card products that their financial institution started offering them, it only makes sense for the same financial institution that houses all of the other financial health products for that consumer to also adopt that type of technology to bring a more holistic experience for consumers. One of the main unique advantages of BNPL from financial institutions is that they have the opportunity of giving consumers everything that they need for BNPL, all within a single financial management application. Remember earlier we talked about becoming the center of the wallet for the next generation? This is how we do it. It's having a fully automated, integrated solution that consumers love and is easy to use, and it's easy to manage as a financial institution because it integrates with all of your existing product lines. Now, what's the actual impact to the financial institution? One, it gives you relevance for consumers that are younger that prefer this as a payment method. It also helps you re-engage your debit card holders that use third-party buy now, pay later solutions. It provides an alternative to those averse to traditional credit products. And it helps drive and increase interchange and interest income for your financial institution as you start to focus on that next generation of banking. Now, buy now, pay later obviously is a very hot topic right now. And I wanted to kind of bring it back to why you joined this webinar today. And it's that buy now, pay later is continuing to grow. And there's so many entrants coming into this field. I would just ask, if you keep seeing all of these new reports coming out and articles coming out about new entrants coming into the field like Apple, like PayPal, just take a step back and think, how does this impact my consumers, my cardholders as a financial institution? And what are ways that we can start getting into this market and making sure we have the products necessary to compete with the third parties that are trying to take that market share and top of wallet status? Thank you for coming. This is the end of our webinar. If you have any questions about buy now, pay later, how this impacts your financial institution, maybe how to build out your roadmap, we would love to have those discussions with you. And I appreciate your time and look forward to chatting with you soon.